Investment is laying out money now, how to get more money back in future. The earlier you start, the greater the return. A very warm evening to one and all present here. COMMPACT, the Commerce Society of Names, in collaboration with Fisdom, welcomes you all to the webinar on Dream Big, Invest Young. Before we commence our today's enlightening session, I would like to share with you COMMPACT's mission and vision. COMMPACT was founded in 2018 by a team of extremely motivated students who were eager to learn and implement skills and concepts. COMMPACT works with a vision to create the students with a platform, inculcating the motto of think, create, and innovate. COMMPACT has 120 plus collaborations with different societies from mother colleges, 150 plus members from NAMES, and 60 plus campus ambassadors across India. We have also partnered with Punjab National Bank, Indian Bank, Oriental Bank of Commerce, LIC, National Stock Exchange, Bombay Stock Exchange, and School, One Side Go, and various other known institutions. Now, with great delight and cheer, I would like to welcome our speaker for today, Mr. Nirav Karkera. Mr. Nirav Karkera is the head of Fisdom's research team. He is known to look beyond just numbers to identify wealth-creating opportunities in Indian capital markets. Former US oil and gas, chemical credit analyst with globally renowned credit rating agency, he excels in translating dynamic economics into wealth propositions. In addition to being a well-known writer and trainer, Mr. Nirav is also a frequent speaker in investor forums and corporate events. Thank you, sir, for joining us today. We are delighted to have you here to share with us how to invest early and dream big. Now, I would like to hand over the stage to Ms. Shivani Muthana, Digital Content Head at Fisdom and our host for the evening. You may take care from over now, ma'am.
Thank you so much, Priyanshi, for that. And of course, I have our very own Nirav with me. I'll come across to you, Nirav, in just a moment. Thanks, Priyanshi, for that introduction. And of course, as you know, Fisdom is a fintech platform that makes investing easy, convenient, and simple. And of course, for the likes of all of you college students, a very convenient platform which you can understand and start your investments early with as well. So of course, just an introduction to what we're doing here this evening. We're hosting this particularly for college students across the country in association with COMMPACT. As Priyanshi said, it is the Commerce Society of Maharaja, Agrasen Institute of Management Studies. And this, of course, is to give you an introduction and help you understand the world of investments and financial freedom better. तो उम्मीद है कि हमारे साथ बहुत से college students अभी जुड़े हैं. आप सब different fields में graduation और post graduation degree pursue कर रहे होंगे. So you must be in your late teens and early 20s, looking forward to your new jobs, first jobs. जल्दी आप सब अपने careers में पहला कदम लेंगे, initial salary earn करेंगे. तो it's definitely exciting times ahead. सबके बड़े बड़े सपने होते हैं जो आपको एक सेंस ऑफ फाइनेंशियल फ्रीडम भी देगा. और इस आने वाले कल का एक बहुत अहम सवाल होता है कि how should you and how can you start investing early to be able to fulfill your dreams by starting young and investing young. So this is a very important phase of your life when it comes to starting your investments early. तो इसी तौर पे आज हमारा टॉपिक है Dream Big, Start Young, Invest Young. And in this webinar, we will talk about investment avenues for young adults and college students, how to create and set aside an investment budget, money mistakes to avoid in your 20s, and how to make use of your stipends, initial salary, and maybe right now pocket money as well. And of course, how can students invest and earn money? So let me also introduce and call upon our speaker for the session. We have with us Nirav Karkera, head of research at Fisdom. Nirav, of course, leads a very important vertical and function in the company that analyzes the market, the economy, and financial products, as well as the customer investment portfolios to help our investors take the best investment decisions. जैसे आपने कहा प्रियांशी, हर इन्वेस्टर को यही बोला जाता है कि जितना जल्दी आप अपना इन्वेस्टमेंट जर्नी और पहला इन्वेस्टमेंट स्टार्ट करेंगे उतना ही ज्यादा चांसेस होते हैं आपका इन्वेस्टमेंट्स में एक अच्छा एक्सपीरियंस का और अच्छे रिटर्न्स बनाने का. So the first question would be to you, Nirav, what are the benefits and reasons to really start investing early, and why do we really need to invest generally as a way of life?
Thanks a lot, Shivani. So thanks, Priyanshi. Thanks, Shivani. At the outset, wonderful introduction, and I'm really looking forward to the engagement and interaction here. I'm sure, most questions are going to be very straightforward, but I'll try and give you, a slightly different perspective from, what conventional wisdom always suggests, right? So coming to Shivani's question, I feel it's a very pertinent question, right? Why should we start early, right? So there were multiple questions encapsulated in it, but I'll take it one after the other. So the first question is, why should we invest at all? And the second one is, why should we invest early? What's the importance of it? So number one, why should we invest? I feel it's a pretty straightforward response to that. um, you know uh, Time, right? And needs. So if you want to buy something and if you need a large amount of money for it, there are only two things that you can practically do. You can either save or invest. And if you save it, you're going to dip into it much earlier than required. That's point number one. The second problem with savings is that there is a beast called as inflation. A very simple thing कि जो 10 साल पहले जितना में खर्चा चलता था, आज उतना में खर्चा नहीं चलता. In fact, these days, let me for most of you, you may be able to associate to this. Just a couple of years back, right? Having a smartphone suddenly started being too affordable to each one of us, right? हर एक के पास एक smartphone रहा था at that point in time. It used to cost 30, 40, 50,000 tops. So 50,000 वाले महंगे होते थे. But today, if you see the really good smartphones, they are just 80,000 and above, right? So obviously there's a brand value at play, but at the same time, there's also inflation. The cost of manufacturing these phones have also gone up, right? So the same kind of inflation starts eating into your purchasing power. And money at the end of the day, guys, there are not many things that you can do with it, quite honestly. I feel the only utility of money is spending it, and till the time you get to spending it, finding out intermediate solutions to park it, right? What else can you do with money? You can either consume or spend, or you can invest it, or you can save it. And investing and saving is just basically parking it aside till you reach a point where you can spend it. And money, it might sound very crude, but its only purpose in life is to give us purchasing power, right? Its only purpose in life is to give us the ability to spend, right? It's as simple as that. But that's exactly what's running the world for us. So till the time we get to that money, there are one of these two options: save or invest. Saving doesn't make a whole lot of sense. Bank account में रखोगे 3-3.5% returns मिलता है. Long term के लिए अगर रखना चाहते हो तो अगर inflation on an average, on ground inflation 10% से बढ़ता है. I'm sure most of you are not staying in rented apartments, but if friends or family staying in rented apartments, generally, especially in urban metros, the step up in rent is anywhere around 8 to 12% year over year, right? So that is inflation kicking in. For most of you who took admission into which into the college that you are in, and if you compare the fee structure 5 years back, you will notice a stark difference in the fees also, right? So that's education inflation. So inflation is basically going to eat into your purchasing power and the value of your money. So the main objective is to ensure that your money continues to remain relevant even though inflation keeps increasing, right? And so you're not really left with any other option but to invest. So I feel the very question about why should we invest, the best way I answer it is with a counter question: what will you do with it if you don't invest it, right? Because you cannot spend it right away, because you need some more money, and by the time you reach that more money, there's nothing else that you can do with it but invest. Now the question is, what do you invest into? I feel we'll get into it at a later point as we delve deeper. And the second thing is about why should we invest early? I feel it's very important that we spend a whole lot of time for us to actually extract great results in anything that we do in life, be it education, be it our career, or be it investing. It is really a matter of consistent efforts over a longer duration, right? So something similar happens with investing also. There is this very famous fable or a story around the Chinese bamboo, right? I'll just give you a short brief about how does that story go. So here's how it begins, right? So there's a farmer who realizes there's a lot of demand for bamboo. Okay, it's in Chinese farmer. Chinese bamboo is too much in demand, so he decides to sow these seeds. He starts watering it. He keeps watering it for a week, nothing happens. He waters it for a month, nothing happens. He does that same for a year, nothing happens. Even yet, he does this without losing hope relentlessly for 4 years, nothing happens. The fifth year, suddenly, sometime in between the fifth year, the bamboo shot up by 90 feet in length, in height, in a matter of a week. Okay, and this is a very famed story or fable around the Chinese bamboo, and many management, investment experts, etc., have started drawing a corollary between this and our success in investment in our professional life. That you may feel that not much is happening, but if you keep going at it, you believe in it, and you keep going at it consistently in the right way, there is a moment where the Chinese bamboo or the objective that you're trying to achieve will shoot out of the ground and achieve a height that is unimaginable, right? So something very similar happens with investing also. You might have heard a very cliche line that it takes years and sometimes decades of hard work to become an overnight success, and very similarly it takes years and decades of investing to achieve a high level of financial success from investing per se. So this is a very high level outlook on why should you invest and why should you invest early. Obviously, I have a lot more structured and mathematical reasons why you should invest early, but let's get to it when we get to that.
Sure, Nirav, beautifully put, and interesting examples and analogies there. And as you said, the time is of essence, and what, college students have at hand with them right now is, of course, time to start early and really have that level of patience to sort of stay invested for the long term. So, when we're talking about the fact of time and that they, have the persistence to stay for the long term, if you can now delve a little deeper into this concept of power of compounding, which we keep talking about in the investment world, and how that really works when you start investing early.
Sure. Yeah. So I feel it's a very important concept. I feel the entire world of investing, if one were to put together just a handful of fundamentals, this would be amongst the most important fundamentals for investment success. That is the power of compounding, right? There is also a very cliched, quote, allegedly a quote, said by Einstein, right? So he called power of compounding the eighth wonder of the world, and said that he who understands it earns it, and he who doesn't pays it, right? So there's this it's a very simple concept, okay, and I'll need some of you to take a couple of steps back, perhaps move back into when you were in school, you were learning elementary mathematics. There was one very important formula that we learned about, and that is compound interest, right? I'm sure practically no one really remembers that formula, but to jog your memory, it went something on the lines of you multiply the principal with 1 plus the rate, divide by the period, and raise it to the time, right? So basically what you're doing is you're multiplying your investment with a certain rate of interest, and then you are raising it to a power, and that power is the time for which that investment is going to continue, right? Or the time for which you're going to receive that investment. So there is a very important message in this really small, succinct formula, and it is that time is the only vector that lends exponentiality to wealth creation. There are only a few things that define and decide how successful or not successful your investment is going to be, and that is the amount that you invest, the rate that you receive, the return that you receive on your investment, the percentage, and third is the time. Amongst these three, it is only time that is used as an exponential. It is raised to time. So time lends that exponentiality to the final outcome. Now, I'm sure most of you are thinking exponentiality kya hota hai, right? So let me give you a simpler way to think about this. Let's do a couple of things with the numbers 2 and 3, right? So if you do a 2 multiply by 3, okay, it comes out to be 6. You do a 2 plus 3, it comes out to be a 5. You do a 2 minus 3, it comes out to be a minus 1. What else can you do a 2 divided by 3, it's going to come out to be 0.67. But if you do 2 raised to 3, which is 2 cube, it's going to be 2 into 2 into 2, which is 8. So of all these basic operations that you could do with the numbers of 2 and 3, you realize that the highest outcome can be arrived at if you raise 2 to the power of 3. So over here, it is your investment multiplied by your rate of interest and raised to time. So if you just multiply it by time, it won't give you as much value as much as it will if you use the time number in the exponentiality or as a power to the entire equation. So this is what exponentiality is, right? It amplifies, it blows up, because you earn a certain interest, and then you don't just, in the second year, you don't just earn an interest on your principal, but you earn an interest on the interest, and in the third year, along with an interest on the principal, you earn an interest on the interest that was computed on the interest as well, right? So it is a snowballing effect that keeps getting bigger and bigger, and I feel this is what the power of compounding is all about. I'm sure there are still many of you who would have not really who have not been able to follow this entire concept of compound interest, etc. I feel there's a very simple way to get you guys into the mode of thinking, and you guys can do this exercise at your own leisure, but consider this example and try and arrive at the answer, right? And I won't give the answer right away. Perhaps Shivani could remind me about this sometime in middle of the conversation later. But here's the assignment. You can do it on an Excel sheet or calculator. Let's say I have a car. Okay, let's say I have a brand new BMW 7 Series. Okay, with me, and I'm willing to sell it to anyone here. Okay, who will agree to pay me the following amount. All I want is 1 rupee today, and you double it to 2 rupees tomorrow, and you double it to 4 rupees day after tomorrow, and you keep doubling it just for a month, just for 30 days. I'm willing to sell that car to anyone who agrees to double the amount every subsequent day and pay me for just 30 days and starting with just 1 rupee. Okay, if anyone is willing to pay that kind of an amount, I'm willing to go ahead and talk about how can I transfer the BMW 7 Series. So think about it, and if any one of you gets the answer, just put it in the chat box and we'll touch base upon it later. But think about it and see how much will you land up paying me if you have to do that. So day one, 1 rupee, day two, you double it to 4, you double it to 8. You keep doing this for 30 odd days. So yeah, this is one assignment while we continue the conversation.
Sure, Nirav, we will hold you to that by the end of this session. Let's see if you really do have that BMW 7 Series to sell as well. So, interesting assignment there for our college students. We'll come back to that at the end of the session, what really the answer is and, what the value of that car could be at the end of the month. Now, Nirav, coming down to the next important question that people usually ask as well, how do you really create and set aside an investment budget? How do you decide the investment amount? Is there some sort of a thumb rule in terms of what you need to keep aside for necessities and the fancy things that you want at some point, and how do you essentially keep aside a minimum amount to invest?
I feel this does not just apply to students, but even full-grown adults. It's perhaps the most amongst the most popular question that people ask me and the team here also. Ki invest kitna karu, kitna zaruri hota hai, right? And I feel the answer, if I have to put it as a thumb rule, it is pretty straightforward. Invest as much as you can by spending as little as you can. I feel it's as straightforward as that. There's no real guideline to what is the kind of amount that you should invest. Okay, so I'm so sorry, someone just replied with the entire formula also. Guys, you have to compute it. Okay, don't just keep putting formulas for me to compute. So getting back, if you want to invest, you must consider how much do you earn, or how much pocket money do you get, or what amount of stipend do you get, or what salary, whatever your source of income is, and you need to figure what is the least amount that you can spend, and then you use the rest to invest. I feel it is as straightforward as that. For a few, you can invest up to 50% of everything that you receive, but for a few, you might be living month end to month end, or pocket money to pocket money, paycheck to paycheck. That could be your situation. It could be one of the two: one, you're really earning less, or two, you're not really spending optimally. Either case, you got to review your situation. But I feel it would be unfair for me to put a number and say, for example, you need to definitely invest 30% of your income, because for the guy who can afford more, he starts relaxing at 30%, even though he could invest 50%. And for the guy who is really unable to invest up to 30%, will not even start with 10%, thinking कि यार 30% नहीं हुआ तो कोई मतलब नहीं बनता है. Whatever you can. I feel the most important thing is getting started, right? With most other things in life, I feel the most important thing is getting started, no matter how big, how small. Just get started with whatever amount you can. Your endeavor should be to maximize this input as much as possible. अगर हो सकता है एक पार्टी skip करके वो amount को अलग तरीके से इन्वेस्टमेंट के तरफ उसको डाइवर्ट किया जा सकता है तो करो. I'm not asking you to make sacrifices, etc. Okay, please don't do that, but be very conscious. If you can create an opportunity for yourself, be smart about it, is all that I'm saying.
Definitely, point taken, Nirav. Starting is the important thing. No matter how much the amount, just getting started and then sort of building consistency into that is what is important. So, if we can now talk about some of the best investment avenues or products for young adults and college students, they of course have time on their side, as we discussed, but they're not really at a phase where they can take very high risk or have too much knowledge about financial products. So, from a risk and knowledge perspective, and the fact that they have time on their side, what would you recommend or advise?
Considering the fact that you have time on your side, and the fact that you can commit to efforts, etc., I feel the number one investment that you can make is in yourself. Okay, guys, you really need to. I know it's not. I will get to financial products, but I feel there is no better investment than in yourself at this point in time, and especially your own knowledge. I feel that is extremely critical at this point in time. And your investment in financial products should also be in a pursuit to enhance your own knowledge. Okay, what I'm trying to imply is, don't invest to become the next big bull, or become the next fancy whatever investor that you read about or watch. Invest so that you can start understanding products. Invest so that you improve your relationship with money. Invest so that you get a first-hand feel of what happens to money in the real world, right? Invest small, but it is important that you experience what happens to money across different products. If you ask me, I would suggest you to invest in every financial product that is legal and feasible, right? And everything that you are eligible for. Why not invest in mutual funds? Why not invest in direct equities? Why not invest in derivatives? Obviously, invest in whatever you want, but always do understand that in any of the investment, in your heart, obviously it's not a common case for us, but in your heart, be assured that this money is being put to risk. So do not put absolutely essential money, but put the money that you would have anyways squandered on a party or some unnecessary shopping. Use that money, but experience all the products is what I would say. If you're saving for a specific goal, okay, let's say if you're investing for a very specific goal, so ye to karna hi chahiye. Saath mein, use your play money to experience all different financial products. Your learnings, I'm not sure how your earnings are going to turn out to be. Most of you might blow up everything that you invest, might not really come out really successful. Some of you may, but at the end of the day, invariably each one of you are going to come out with fantastic learnings. That's one thing I can be reasonably confident about. On the second side of it, if you want to invest for a very particular goal, okay, let's say you want to invest for higher education, or let's say you want to buy a fancy car, or whatever you want to do, I feel it is a good time to start committing to the habit and committing to the exercise, right? It doesn't really matter if that car you're aspiring for is a 50 lakh rupee car or a 1 crore rupee car. It doesn't really matter. Start putting in 500 bucks every month. Okay, start putting it and start saving towards it. As and when your income increases, you can always stop it up, but you need to commit to the discipline of it. And I feel the best way, the best product, to start with, and the most convenient product to start with would be one of the mutual funds out there. I feel mutual funds are a great vehicle because there are professional fund managers doing their job. It is also superbly operationally convenient. Matlab, with the Fisdom app, I can tell you all you need to do is key in your phone number, OTP aa jayega, complete your KYC, which is, by the way, a breeze. Okay, it won't take you, more than a couple of minutes tops, or else I would have said seconds, but it's going to be really smooth, and you just start investing just like that. You automate and SIP every month. Doesn't matter. The amount could be even $500, $1,000, whatever. It doesn't matter. But the fact that you are exposing your money to a product as fantastic as a mutual fund will help you not just learn about how does the dynamics works. You will obviously daily you could look at your portfolio, see ki aaj kitna badha, kitna ghata, all of that. You can be inquisitive, check ki kyun aisa hua, did I choose the right fund, did I not. Obviously the people here at Fisdom are available to help everyone. You just got to write to us and we'll write back as soon as possible. But at the same time, this will get you into the right mode for investing for bigger financial successes, right? And you can do that now. And then I don't feel there is any time better. There's this cliched conversation also. I'm going to repeat it. Someone asked Warren Buffett, allegedly, all right, I haven't confirmed, but asked Warren Buffett, when's the best time to invest, right? And he said it is the same as the best time to plant a tree. One was 20 years back, and the second best time is today, right? So obviously you cannot travel back in time, but today and now is the moment that you have. And I feel the biggest problem, just like we face, as students also, is the inertia, right? It's just too boring. Like, nahi man nahi kar raha hai yaar, aaj nahi karenge yaar, kal dekhenge, weekend pe dekhenge. Just like with our assignments, just like with our exam preps, investing is just another thing which we kick the can down the road, and we're like, ठीक है ना यार, मतलब मेरे पास है भी नहीं उतने पैसे, सिर्फ 500 ही तो है, या पैसे बचेंगे तभी तो इन्वेस्ट करूंगा. But miraculously, if you want to go out for the dinner with friends, you will find money for that. So just try and push yourself, just make that first investment. I'm not even going to ask you to continue it and rigorously follow it. Obviously you should, but at least take the first step. I'm not asking you to do something really huge and magnanimous on day one, but do something that's at least reasonable. I feel if by the end of this call, if you are able to actually make your first mutual fund investment, right, you are going to feel so proud about yourself. I don't think it really matters what happens to that money, but the fact that you are going to give yourself an emotional boost and a strong confidence that you are mature enough to handle your own money. It is a myth. People feel कि पैसा कमाना जरूरी है. And इसी चक्कर में no one really learns about what do you do with the money that you have earned. I usually say, think of it, guys. India is a high earning society, but not a high investing society, right? Indians are high earners, but we don't have as many wealthy people as we should ideally have had with the kind of income that's around, right? Think about it this way, that from the day you started getting money into your hands, right? Firstly as pocket money, then as stipend, then as your salary, and you keep going ahead. It is just you running behind a lot of money, and on the way you're picking money with both hands and stuffing those coins into your pocket, and you're running along the way only to finally discover that your pocket had a hole all along, and that hole is the hole of ignorance, right? That is where your coins are going to slip out from. You won't realize it today because all you're focused on filling your hands and stuffing your pockets. But trust me, have this conversation back home with either elder siblings or family relatives, whoever is earning, and narrate this very analogy to them and check their reactions. Ask them if they ever feel that they've been running all along just focusing on grabbing the coins with both hands and stuffing their pockets, only to later realize that they've had a hole in their pocket all along, and they will have a story to narrate. So a friend of mine told me once that smart people learn from their mistakes and wise people learn from others' mistakes. I am really hopeful that this batch turns out to be the wiser one. Nonetheless, I feel it is my karma to give it a shot, right? It's my duty to give it a shot and tell you guys that this is what lies ahead, and do the smart thing. Okay, don't repeat mistakes that even I've been guilty of. It took me some time, and these things are not really taught, but this is something that you absolutely need to know. I don't mind put some money aside, use your party money to try, experiment, use every product possible, and tie a smaller amount to a better goal. It could be something as simple as, you invest some money towards thinking ki agle saal, for perhaps your loved one's anniversary or birthday, you'd like to gift something good, and just put that money aside. Anyways, there's a good chance that you're not going to be prepping for it till the month before. So just give it a shot, just try, just see what happens. And I feel that should push you in the right direction. And guys, I always say a single step in the right direction is progress, and progress is progress no matter how big or small. What's important is that you progress. And I am just really hopeful that this batch turns out to be the wiser generation. I was smart, but I wasn't wise enough. I made my mistakes, and I'm still learning from it. I feel you could be wiser and learn from the mistakes that I am giving you an insight into.
Sure, Nirav, nicely put there, and as you mentioned, Indians are known to be great earners, big earners, but hoping that, the younger generation sort of become smart investors as well. And the importance really is to start no matter, how small that progress is initially. So as a starting point, Nirav, you did bring up, SIP, systematic investment plan. And for most beginners and people who are starting as early as in college, where they have limited resources, people who start as early as in college, systematic investment plan is usually recommended in the financial world. So if you can take us through how this works and what is the minimum amount that one can really start with. Can it be like 500 rupees, 100 rupees? What are the options out there?
I feel, pretty straightforward, the SIP concept. This, think about it as an EMI, but an EMI towards financial success and not towards an expenditure. It is a monthly commitment. You start it, it gets auto debited every month, the same amount. That's an SIP. It's a systematic investment plan. The only difference, and why do I call it a good EMI? One, obviously, it goes towards a better goal and a smarter goal. You are having this money at the end of the day. You are not left with a piece of electronic that's going to depreciate. That is obviously there. But uske alawa, you must understand that this is a voluntary pursuit. Okay, so there's no penalty if you stop your SIP. Okay, ये 3 महीने है, पैसे है, auto debit हो गया, no problem. चौथे महीने, for some reason you had some expense, you don't have that kind of money around, it's okay, you can pause the SIP, you can reduce the amount. Let's say 7 months down the line, you get a windfall gain, or maybe you start working at a place. Okay, so you can increase the SIP amount. So it's highly flexible. Okay, there's no penalty to stop, there's no penalty to increase, there's no penalty in continuing this. It's just an endeavor towards your own investment and saving, right? And it can start with, there are a few mutual funds that also accept it in multiples of 100. I feel you can start with even 100 rupees. And guys, I I'm not trying to pitch, but 100 rupees, guys, I mean, that's the minimum amount. And honestly, if you ask me at this juncture, I'm not even trying to ask you to do it only through the Fisdom app. Okay, obviously you can do it super easily through the Fisdom app. And my team here works very closely with the engineering team. We have created all sorts of algos that really will help you get the most bang for your buck. Okay, will help you get the most optimal kind of returns. At least that's our endeavor, and that's what we're trying to deliver through the Fisdom app, and a super seamless experience. Okay, it's not going to take you even a couple of whole minutes to get you started on this entire thing. You can just fire it up the app and just invest into. But obviously it's all convenient and great with the Fisdom app. But at this point, I feel the place that you are at, I'd like to implore and say, start. I don't care where do you start or with whom do you start, or which is your choice of broker or whatever it be. I feel it is important that you start. Obviously, Fisdom makes it super simple, and that's amongst the best apps that I personally know about. Obviously, also you can try it, but at the same time, what's important is you start and invest in a mutual fund and in an SIP to start with. Very simple. Make your first investment, select the auto debit option, and subsequently हर महीने उतना पैसा auto debit होके आपके investment में चला जाएगा. In fact, it's a great practice. On whatever day you get your income, It could be in the form of stipend, pocket money, salary, whatever it is. Set up an SIP for the very next day or the day after the next day, so that that money goes out. And guys, you always figure out how to live on any amount. Okay, I am yet to meet someone who wasn't able to get through a month because he was short on the budget. Everyone figures a way to get through the month, no matter how good or how bad the budget is in that month, right? So let that small amount just go, and you learn to deal with life after it. Okay, and just let that 100, 500,000 rupee go, and figure life beyond it. Right. So that's what an SIP is, and that's how it works. And once again, I know I'm being very pushy on the time, but I feel this entire story about invest young, dream big. It's about the time that you have in hand, that is not gonna get back to you, and the learnings that you can get out of it. And it's a bonus if you also make a whole lot of money. I mean, who doesn't like a ton of money, right? So yep, that's how an SIP works.
Sure, Nirav, we also do have some questions from students on, SIPs, which we will take at a later stage. Once we finish this discussion, we will, of course, have about 10-15 minutes of a Q&A session. Going, deeper into the investment world, Nirav, I think, the two sort of assets, when it comes to the way you look at it, is equity and debt. So is there a general thumb rule that is followed, in terms of how much percent should one invest in equity, how much should you put in debt, depending upon your age?
So I would say that most people say it, the asset allocation. We call it asset allocation. In short, it is कितना percentage equity में डालना चाहिए, कितना percent debt में invest करना चाहिए, right? And for most of you who are getting confused by investing in debt, debt तो loan होता है, उधार होता है. Let me make it very clear. Equity is equity stocks, share equity, share market, equity capital market, and debt is basically debt securities. Think about it as debentures, bonds, your fixed deposit. Okay, these are called as debt securities, right? So it is about the mix between the two. You can imagine one sort of instrument has less fluctuations in their prices, and equities are highly more vulnerable to fluctuation in prices, all the more volatile, right? So most people try and say that there is a thumb rule around age. Personally, I feel it doesn't make a whole lot of sense. Okay, because uh, just because someone's 20 doesn't mean he can take on a lot of risk, and just because someone's 70 doesn't mean he can not really take any risk. It all depends on what your personal appetite for risk is, and for how long are you willing to stay committed to that investment. Let me give you an example. Let's say today you're young, you're let's say 21, 22, whatever, right? And you don't really need that money that you're going to invest every month, right? You tell me ki 500 रुपया इन्वेस्ट करना है, लेकिन ठीक है, मेरा लाइफ चेंज नहीं होने वाला है. It's not as if I'll need this 500 rupees in the next 6 months, right? I'm okay to let it go for, I don't know what, 5 years, 10 years, maybe I'm never going to see it. I'm okay, I'll just let go of this 500 rupees. So since your horizon is so high, right, and since you say you're not even going to look at it, so I'm going to figure that you are okay with fluctuation. अगर ये 500 का बीच में 300 हो गया, फिर 700 हो गया, फिर 200 हो गया, फिर 1000 हो गया, you're going to be okay with it. You're not going to tamper with it. You're not going to need that money. Okay, so I'd ask you to invest in equities. Okay, large cap equity funds, mid cap equity funds, small cap equity funds. Small caps are generally riskier than mid cap riskier than large cap, and by risk I mean the probability of incurring a loss in a shorter duration, right? So that's what risk is. However, at the same time, if you say that no, I'm investing for a very specific goal. Okay, I don't want the money to go too too high or too low at any given point in time. See, understand, high and low comes साथ में. Okay, अगर ज़्यादा upside चाहिए तो उतना ही downside भी appetite रखना पड़ेगा, उतना downside के लिए. But you're like कि ठीक है यार, एक छोटे रेंज में चलेगा मुझे अगर गया, but मुझे बहुत ज़्यादा fluctuation नहीं चाहिए. बहुत ज़्यादा fluctuation, बहुत ज़्यादा volatility का मतलब क्या होता है? बहुत ज़्यादा risk का. For example, plus 40%, minus 40%. That is risk. Most people think या तो zero return आएगा या तो 40% आएगा. No, it is plus 40 and minus 40. Okay, and so that is high volatility approximately. I'm not giving. I'm just trying to give an indicative figure as an example, right? What is less risky relatively? plus 10% minus 10%. It will move in that range. All right. So if you want to chase the higher 40, you need to have a longer horizon, and you need to have an appetite to see it to dip even minus 40, for instance, over here. And if your period is shorter, always understand equity investments. It needs to be a long-term investment. Bare minimum, you need to be ready for at least 5 years, to not touch it for at least 5 years in a pure equity fund. Right? If your tenure is slightly lower, in 3 years, you can use a mix of equity and debt. Start with 50-50. I feel that's a basic starting point. And as you understand your risk profile better, fine tune it. And if it is like very close, let's say in less than a year sort of a thing, there are these debt mutual funds, liquid mutual funds, there are ultra short-term debt. You can obviously write to us and we'll help you. But there are these debt mutual funds which are less volatile, but gives you more degree of certainty, relatively more, and still helps you earn better than inflation in most cases, right? So you're at least going to make money. Might not be very aggressive, but because your tenure is short, you need to stick to this side of the products. So that is the general framework you must adopt. I feel there's no point linking your debt equity choice to your age. You should link it to for how long are you willing to commit to it, and how okay are you with the change in the value. How okay are you with facing intermittent losses, knowing that it is not going to be forever, sort of a thing. Right? So yes, that's how I view this entire asset allocation question.
Sure, Nirav, point taken, and as an add-on to this, what kind of knowledge really do you need to have? How much awareness should one have? At this age, maybe college students are not fully aware of the kind of products and in-depth knowledge of how they work. How much knowledge would help them make relevant and well-educated financial investments? And if they don't have this knowledge, then what are the options? Because we do have some questions coming in from Neha, Yash, asking about index funds. Are they kind of mutual funds? So this really opens up the conversation to passive investment avenues. So index funds have emerged as an attractive option and interesting option. So if you can delve a little bit into that as well.
So right at the outset, you asked how much knowledge is important to make good investment decisions. बहुत सारा. Okay, you need a lot of knowledge to make good investment decisions. How can you get there? Only by experience, only by trying, only by learning, only by reading. Let me let you guys in on a secret. I look after product research here, and I'm still learning. Okay, I still don't know everything that I should ideally be knowing, and I feel no one in the industry knows everything that is required to be known to make an absolutely foolproof successful investment. It's something that you keep learning about, keep reading about, keep experiencing, and keep going through the process of investing, and you'll eventually learn by experience and exposure, right? And at this point in time, I realized that many of you are talking about index funds, mutual funds, SIPs, etc. Okay, so let me give you a very clear idea. What is an SIP? एन SIP का दूसरा ऑप्शन होता है लमसम. या तो लमसम इन्वेस्ट करो या तो मंथली इन्वेस्टमेंट करो. SIP is like an EMI, a good EMI that goes into mutual funds. A mutual fund is a product. या तो म्यूचुअल फंड में इन्वेस्ट कर सकते हो, या तो FD में इन्वेस्ट कर सकते हो, या तो आपके कोई और RD में इन्वेस्ट कर सकते हो, right? So these are comparables. Don't get confused between what is an SIP and what is a mutual fund. The SIP is the way. The mutual fund is the final investment product. Okay, and most of you also spoke about index funds. Index funds are a type of mutual fund. There are, if I have to broadly classify, there are approximately 46 types of mutual funds that are available. जिसमें से एक है index funds, right? Index funds are good. Okay, no question on that. उसको कई लोग passive investing वगैरह भी कहते हैं. At this point in time, I feel unless you really have first-hand experience in investing, and you really understand the dynamics of how mutual funds work and how equity markets work, don't really bother about it. Okay, you can keep cutting finely into the types of products available, can keep getting into the details, but do not let this inquisitiveness paralyze your actions or your investing actions, rather. Okay, it doesn't really matter, just choose a fund and start. Okay, and are index funds good? Yes. Are actively managed funds good? Yes. Are large cap funds good? Yes. Are small cap funds good? Yes. They all serve a different purpose. Okay. They all are meant for different objectives. They all take an exposure to different kinds of assets and securities. It's okay. There's a whole universe of thousands of stocks listed. If I have to put together the entire universe of securities available, we are going to get into multi thousands of securities investable, right? But don't really worry about that. Index funds are good. Passive funds, you'll keep reading about it in the media, in the news. These are all buzzwords, okay, that will that you might feel it is obviously it sounds really smart while talking about it into conversations, but you must also understand that every product has a merit, and that every product has a particular objective, and every product is meant for a particular need, right? And there is a very different kind of investor for every different kind of product. If you like how index funds are, I feel you should start. Okay, you should start, see, compare it. Always, if you feel an index fund is good, start investing in an index fund, and keep also monitoring what does an active fund look like, or how is an active fund performing. I feel there's no better way for you to learn, okay, and decide. And then there's just one word of caution and advice that I can give you guys. Just because some funds historical returns are looking good, please do not choose that, because the past has nothing to, it is barely indicative of the future, right? So try, read a little bit about it, and no matter how less you have read, just start off. Call it an index fund, an active fund, just start it. All right, and eventually you will start understanding the difference. The For those asking about index fund, it's a very simple thing. Nifty 50, Sensex 30, in सबके बारे में सुना होगा. So these exchanges, they have a certain index. Now what is an index? An index is a basket of stocks. इसमें stocks A, B, C, D, E है in the proportion of, let's say, 10, 20, 20, 30, 20%. Okay, 10, 20, 20, 30, 20%. And this is how उसका 100% कंप्राइज होता है फॉर स्टॉक्स ए बी सी डी ई. ये सब साथ में मिला के इसको एक इंडेक्स कहा जाता है, जो कि एक्सचेंज बनाता है इसे. So Nifty 50 is a basket of 50 such stocks in different weights. So when you invest in an index fund, what the index fund does is it mimics the performance of this basket in this particular allocation, right? So this is the way this fund is constructed, and similarly different funds are constructed very differently. So I hope that explains about what index funds are, and I hope that answers the question on how should one view this entire thing between what is an SIP, what is a mutual fund, what is an index fund.
Sure, Nirav, and of course, that factor that you brought up, don't always rely on past performance, but also always compare different avenues, different asset classes, and see what is sort of working for you in terms of your investment goals. Don't always go by past history. So interesting tips and bits of advice there. Now, when it comes to all of this, what are the top 3 or 5 money mistakes to avoid for young investors?
3 to 5, I feel this okay. So a couple of mistakes. I think I'll draw upon my own experiences, okay, and most of these are mistakes that I made, and I'd like it. I'd absolutely love it if you don't repeat it. Guys, find new mistakes to make. Do not repeat mistakes that you already know would be a mistake. I feel the first mistake is not valuing the time, the value of time that we have in hand. When it comes to investing, I feel the biggest mistake I made was thinking that I'm too young to be bothering about investing, and I should do it at a later point in time. अभी तो मेरा खेलने कूदने का उम्र है, अभी तो पार्टी करने का उम्र है, बाद में तो नौकरी लगी जाएगा, तभी तो कर ही लेंगे, तब तो करना ही पड़ेगा, sort of a thing. I feel that's not a very smart way to go about life, and I see most young guys making the same kind of a mistake. 2, I feel not focusing on my relationship with money. I feel for a very long time I would think of money simply as a commodity. I did not really value it as much. I feel an example is if you're going out, okay, to do something, and you think about buying something in a way ki, let's say for example you're going out to buy a shirt and you have 5,000 rupees in your pocket. You're going to buy a couple of shirts and you have 5,000 rupees. Then you go out searching ki 5,000 mein kya kya aayega, right? Because at this point in time your relationship with money is very weak, because you have no form of uh, affection or gratitude towards that money, because what you're trying to do is try to see what is the maximum that you can give away out of it, right? You're trying to see 5,000 में कितना आएगा, या 5,000 में क्या आ सकता है, या 5,000 में कौन सा शर्ट आ सकता है, without really considering the fact that शायद 1,000 का भी शर्ट अवेलेबल होगा. और अगर वो 1,000 का शर्ट अवेलेबल होगा, most of us make the mistake of thinking कि ठीक है मैंने तो 1,000 का शर्ट लिया, this leaves me with 4,000 rupees to party. So having this spending mindset, consumption mindset, I feel this really creates a rift between your relationship with money. Think about this as just any other relationship, right? If you are going to be so focused on of thinking of ways in which you can get away from this partner and this relationship, it's not going to turn out to be well. Let's say if it were with a love interest, or if it were with your parents or friends, if you spend the whole day long thinking about how fast and how well can you get away from this partner and this relationship, you will definitely get away from it, but it's not going to turn out to be well. And I feel it's the same thing with money, right? Instead of thinking about ways to spend, I feel you must start thinking the other way around. For what amount would a shirt be available, and what is the the best kind of shirt I can get for the least amount. I'm not asking you to be stingy, but I'm asking you to be thoughtful. I'm asking you to think twice. I'm not asking you to hold back on money, and but I'm definitely asking you to not benchmark your budgets with the money that you have, but benchmark your budgets with the least amount that you require to spend. Just because you have 5,000 doesn't mean you spend 5,000, right? So that is another mistake that most of us make. Third, I feel another mistake is overthinking. We call it the paralysis of analysis. The I've spent a lot of time reading about different investments. Even when I was much younger, I've been typically ahead. अगर कोई मुझसे पूछ लेता कि types of investments पे ऐसे लिख दो, I would have written a superb essay. I'm sure, I had that thorough knowledge, and I was just continuously reading because I was just trying to figure which is that one investment that's going to make me a millionaire. And I feel that entire thought process is, a very wrong thought process. I feel I lost out on most time, and I sat on idle cash in the dreams and hopes of becoming a millionaire. And I realized that अगर वो नहीं करता और सिर्फ action leta, if I had just started with whatever investment came my way and finally figured my way, I feel I would still be at a better situation. I always say that if you're a player on the field, you may win, you may lose, but you're at least playing. If you win, you win, and if you lose, you learn. But there is nothing that absolutely nothing that fence sitters get. Okay, if you're sitting on the fence, you're getting nothing or out of that entire game that's happening. You're neither gonna learn or you're neither gonna earn. Nothing's gonna happen. So I've had that brief moment of nothing happening because I was too busy sitting on the fence and analyzing how the game is played instead of getting on the ground and playing it myself. And it could be perhaps I was slightly worried that I might lose, and perhaps I was all the more obsessed of how could I be the greatest player of all time. I feel that's another mistake that most in the younger generation make with money. And I feel another one mistake is that each one of us take take the money that we receive for granted. Okay, if you start considering your own pocket money, okay, or let's say any money that you get from friends, relatives, etc. Most of you might be receiving pocket money, etc. If you start considering that pocket money as a loan, okay, if you start considering the fees that you have paid through your school and college as a loan, and if you were to consider the fact that what if you had to sponsor all of this yourself, I feel you'll realize that it's a huge amount, and you will perhaps be more conscious and more thoughtful about your spending habits and your relationship with money. Today, just because most of you, I'm sure not all of you, but many of you are not putting it up on your own. You might not feel the pinch as much, but for the guys who have taken a loan, for the guys who are hustling their way into paying their fees, you guys know what I'm saying. You know that you are going to be a whole lot more conscious about the money you spend versus most others who haven't gotten the opportunity to foot their own bills. I feel it's an opportunity that a lucky few get, and if you are getting that opportunity to foot your bills, you're learning those life lessons pretty early in life, and it's going to do you well. So yeah, Shivani, I feel these are a couple of mistakes that I'm hopeful that they don't repeat these mistakes, but I really hope you make new mistakes of your own so that you have something to say to the next set of guys you meet.
Sure, Nirav, great takeaways there. Of course, you drew from your own experience, and I must say you are pretty young yourself. So you
Too many
also
mistakes for a young guy, no?
too many mistakes for a young guy, but of course you're on the field and you're learning and earning, and that's the way to go. Now coming to making that first investment and creating your first portfolio. I don't know if it's too early to talk about this, but how should you really make your first portfolio? What sort of portfolio allocation needs to be done? Because we always, of course, say never put all eggs in one basket. So at this stage, how would you sort of look at it?
See, honestly, I would say that just start off. Okay, the easiest product is a mutual fund. I'll just take the example of the Fisdom app. You open the Fisdom app, you select one of the use cases that we have. It could be build wealth for longer term or any of it. Okay, just select it, and it will show you an automated, very customized portfolio that will really do you well as per your own profile that we get an understanding of. And you can go ahead. Obviously, there's the assistance there. Let's say if you try to invest through someplace else which doesn't offer this kind of insights and assistance like the Fisdom app does, just select any two funds. One, it could be an equity fund. The second one could be a debt fund, or else select an equity fund and a hybrid fund. Please, at this point in time, invest amounts that you're willing to, not touch for at least 4 to 5 years. So invest that small an amount into equity funds, and for the hybrid funds, at least funds that you're okay to let go of for at least the next 2 to 3 years, sort of a thing. Okay, and commit this as an SIP. I feel the best way to start is 50-50. If you have to choose between equity and debt, invest 50% in equity, invest 50% in debt. Beyond a point, doesn't matter which equity, which debt. But if you really want a category, choose a large cap fund or choose a large cap index fund on the equity side. On the debt side, you can start with a short term fund or a banking PSU bond fund. Okay, any of this. Just start off. Again, this is not a recommendation, but this is something that I want you to start reading about and start exploring. And then from there on, as you experience, as you understand how does each one react, start diversifying into more funds, start changing your allocation, start taking those decisions, seek professional help. Write to us. The team at Fisdom here is obviously available, but you can start with a 50-50 sort of an allocation for a longer term portfolio, let's say anything 3 to 5 years and beyond, and just see how does it pan out. I feel that should be a good starting point.
Great, Nirav. And what about the documents and procedures and the initial steps that one should follow to make an investment? We spoke about KYC, know your customer. People will also, have this question of why and when do you need a demat account? Do you need it for a mutual fund, or is it just KYC? So if you can just break that down as well for our audience.
Absolutely. So डीमैट अकाउंट म्यूचुअल फंड में इन्वेस्ट करने के लिए जरूरी नहीं है. अगर डीमैट अकाउंट है तो उसके थ्रू भी कर सकते हो, बट जरूरी नहीं है कि म्यूचुअल फंड के थ्रू डीमैट अकाउंट के थ्रू इन्वेस्ट किया जाए. Right? You can also invest into mutual funds without holding a demat account. Like you do it on the Fisdom app, you don't need to have a demat account. Okay, life's pretty straightforward there. At the same time, if you want to invest in direct stocks, equities, etc., you need to have a demat account. You can have your own demat account on the Fisdom app itself. Even stockbroking is available. We also have the option to invest in stocks, equity directly. We have our own demat, and that's also a fantastic journey. Okay, I feel the prices are super low, and the journey is super simple. So you can explore that, but that's what DMAT is for majorly. KYC, very straightforward, absolute mandatory. You need to have a PAN card and you need to have a bank account in your own name. Okay, and you need to have an Aadhaar card. I feel these three are absolutely mandatory, and I don't think you need anything else. All you'll need to do is key in your PAN number, put in your Aadhaar number, put in your bank account details. It will link your bank account. It will send you an OTP to confirm whether this is actually your Aadhaar and you are the PAN holder, and that's all. I feel pretty straightforward. It is as simple as creating an account on any of your let's say shopping websites for that reason, right? You just put in your address, your phone number, your email ID, you're done. Here you'll just have to put in additionally your Aadhaar and PAN, and almost straightforward done. And especially with these digital platforms, like on the Fisdom app, I know this is as seamless. If you try to do it offline, thoda bahut paperwork hai. You might have to take hard copies of these, sign it across because there's no OTP wala system, and then you fill out an application form. It's slightly cumbersome, but the digital thing is really smooth and doesn't really ask a lot from you. Just have your PAN and other photos handy. I know you already have it, most of you. If you are if you have come this far in the education system, you have been furnishing it almost everywhere. So just use that. I feel KYC is not a hassle. I feel that's not even anything one would really notice also through the journey. You'll just breeze through it and get to the exciting part.
Sure, Nirav, I think, we've pretty much covered everything that we have lined up for the evening. And I hope, Nirav has, and all of us here at Fisdom have managed to convince you to really get started and make that first investment. As Nirav said, we are now in this space of fintech platforms and apps that have made everything so convenient and easy. So there's nothing that's really stopping you from making that first investment. We spoke about habits to really build consistency as well. And now, Nirav, of course, a time to see if there are any takers for your BMW 7 Series. Let's see if we've got any answers, and if you can also reveal that big number.
I realize some people are putting in the formula and expecting me to compute that formula for them. Hilarious.
But let's see, like, what is the number? I mean, to really tell them the power of compounding, what it means, and in a month, how much can you earn by just putting in 2 rupees on a daily basis?
Yeah. So many people raised it to 29. Please click it, do it once more. Okay. It's a 7 series. In fact, if most of you have done it till 29, it would be a daunting figure in itself. Okay. And I'll also tell you, okay, so there are two kinds of people. Okay, I went through the comments. There are two kinds of people, one who compounded it for 29 days and one who compounded it for 30 days. Okay, there are two kinds of people. And there are some people who put in the E also in the response. Okay, so जो calculator compute नहीं कर पाता Excel पे, वो plus E09 करके end कर देता है, right? So someone put that E, guys, that you need to open up that cell. This is not how you look at it. So guys, the actual answer is 107 crores. Okay, and for many who did it for 29 days, right? For 29 days, you will notice anyone who's summed it up for 29 days, you will realize that the amount was 53 lakhs, 53.7 lakhs, right? So till the 29th day, it was approximately 54 lakhs, and just one another day, obviously, you double 53 lakhs multiplied by 2, it becomes 107 crores. I'm sorry. Is it 53 lakhs? 53 lakhs. Oh, no, I'm so sorry. 53 crores. I'm so sorry. 53 crores. I was just going through the response. So you double up 53 crores, it becomes 107 odd crores. So guys, you realize if anyone offers you a deal that starts with 1 rupee today and double up for a month, do not take that deal. Okay, do not take that deal. It goes up to 107 crores. अगर कोई 29 days भी बोले तो भी मत लेना. 53 crores is too much to pay for a BMW 7 Series. It comes for far cheaper than that. So this is the power of compounding, right, guys? You might not realize it, but it isn't as intuitive as you may feel it is.
Great, Nirav. I think, that was well put and great assignment to get that interaction going. I think we're done for the evening. We've spent almost an hour with you. I hope you did manage to get some great takeaways from here. Also sharing the link, to get your investment started. If you are interested, here's the link to the Fisdom app. So you can, of course, check it out and see how it goes for you. Thank you so much, Priyanshi and Ananya. Back over to you for the closing remarks. It was a pleasure, of course, speaking to all of you.